Well, for more on why Lowe's missed the mark, let's bring in retail analyst Joe Feldman. He's managing director at Telsey Advisory Group. Institutional investor calls it one of the best independent research and consulting firms in retail. Joe, good to see you. Thanks for joining us. So today's numbers, by most accounts from Lowe's, not so impressive. Stock is lower. Company also lowered its profit forecast. This was one of your top picks for 2011. So what were your takeaways from the report this morning?
Well, clearly disappointing in a word to describe what the feeling was. I mean, we thought that they were going to be able to do better. We knew sales were going to be weak. We thought they would have been able to operate a little bit better through it. Now, when you really sift through the numbers, removing the sales issues, the gross profit was better than what a lot of people thought it would have been. And on the operating expense side of things, they actually kept it flat on a year-over-year dollar growth perspective. So, yes, there was deleverage because of the lower sales, but going forward, the outlook really just incorporates the weak first quarter.
So, Joe, when you think about what Lowe's had to say, are these factors that are going to impact a company like Home Depot? This company reports tomorrow, also one of your top picks.
Yeah, I mean, you've got to believe that the sales trend is going to be pretty similar. Home Depot has been performing a little bit better on the top line than Lowe's, so we would still expect some outperformance relative to Lowe's, but I would think that their same-store sales are going to be slightly negative tomorrow, you know, maybe a -1, maybe even -2. That being said, I think they can still continue to operate quite well, and again, on the gross margin side, I think there's a lot of good initiatives. They've finished rolling out their supply chain initiative, and that's only going to benefit them going forward.
Joe, just when we look at home numbers, just generally speaking, the housing picture is one part of the economy that doesn't seem to be improving. At some point, doesn't that drag a Lowe's or a Home Depot down?
Well, it does. I mean, clearly, when the housing data comes out and it's negative, you sometimes and oftentimes see the stock sell off a little bit. I mean, the truth is they're a little bit less correlated these days with housing than they used to be. By our accounts, it's maybe 15–20% of sales really driven by housing turnover, meaning home sales, as opposed to, you know, I don't know, 4 or 5 years ago, it was probably more like 30% of sales. So you've definitely seen them come off that. And the truth is, the housing market's been pretty stable. The pricing picture is really what's been a pressure point. And so to the extent that the prices come down, you do see a little less investment on the home for those staying in their existing houses.
Joe, you cover a number of stocks. We've got about 30 seconds here, unfortunately, but let's talk about Wal-Mart, a big company reporting again tomorrow. I know you like a lot of the dollar stores, but Wal-Mart has been struggling.
Walmart has been struggling. I would expect same-store sales to be negative tomorrow, but I think everybody's kind of baking that in. You've seen the stock actually perform quite well as of late, and I think that's going to continue. Assuming they can say some better things about the near-term trends, that's what will help the stock keep working.
All right. Thanks so much for joining us, Joe. Always appreciate the insight. We've got to have you on more often so we can cover all the stocks that you watch closely.